Howdy, howdy. How's everyone doing? Hit that like button, ladies and gentlemen. Welcome to the live stream. It's been a while. I think it's been about a 2-week time frame since we've done it. Hope everyone is doing good. Hit that like button so we can get it started. Subscribe to the channel if you haven't already. Just a small little gesture on your side. We'll get situated here quite shortly. Sit down. Grab yourself some ticks and sweet tea. What am I eating? Nothing. Well, I am technically. I'm having some dark chocolate to water up my mouth to get this live stream rolling. Welcome, Instrucciones PC. What's going on? It's good to see you. It's always good to see you. Yeah, DC or dark chocolate is definitely something that is underrated. Always good to have some of that Godiva 70% dark chocolate on the side to boost my low blood sugar levels. So yes, welcome everyone. Hit that like button, subscribe to the channel again. Just doing some housework here, getting people situated here. Hope everyone is doing good. X-Force is a nice modern one-bedroom cost in Seoul more than 1,000 USD per month for someone who will be there for 3 months. You're in the average, I would say. That's a pretty good averaged level. You won't find a big place, but you'll definitely find a reliable, a roof over your head, a bathroom, a kitchen maybe, a small place to eat. But what more can you ask for? You'll be out most of your time here in South Korea, right? Haha, 100%. 100% dark chocolate. Dude, you might as well just go to the tree and break off that cacao and eat it there. How's my family doing? My lurkers, my fellow Elliottian wavers out there. Hope everyone is having a great, humble morning. Great day to be alive. Hope you all had a fantastic breakfast or dinner wherever you are in the world. Make sure to eat. Zach, it's great to see you. Hello, hello. Good morning. 10:30 in Paris. Okay. So you're just about to go to bed, huh? Well, hopefully this is a great bedtime story for you. Will I talk about Doge short term? No, I'll be talking about Bitcoin and some follow-ups to the overall crypto markets. What about the ending diagonal instead of a leading? Yep, we'll go over the leading diagonal count that I've been sharing for quite some time. This one here. I think some people are talking about this being an ending diagonal. For me, I would kind of disagree on that front, saying that this is ending down because it is hard to fit into a larger degree. But we will go over that and explain that, so don't worry. Morocco 930. Okay. Again, ladies and gentlemen, one last time before we get on, hit that like button. We're almost there for that like goal. Subscribe to the channel. Hit that like button. Even my enemies do press the like button. I don't have any enemies. People are enemies to me. Enemy of the state is what I am. Globium is asking, you mentioned you're holding 25% of your XRP bag as a moon bag. How will you be choosing a final target? Are you waiting for more info as we approach that $20 range target? That's basically it. Yeah, you answered your own question. It's basically that moon bag that we have no idea where the actual cycle targets are going to be. It's just more of an ideal target than anything else, because we all know expectations from the Elliott Wave theory doesn't always come to our fruition of our plays that we want to be happening from a wave theory perspective. But it is very important to have that risk management approach, and that's why only 25% of that bag is reserved for that exact scenario, because we simply do not know when these actual targets are going to be playing out. So you got to make this systematic approach from a risk management perspective, which is, I would arguably say, that's more than actually the actual analysis in itself. Because in the end, no one cares about you in this market, right? You can be right all the time for having the best analysis in the world, but you won't have the correct execution. So in the end, we're all here alone in this market. If you really think about it, we're all in the same place in terms of expectations and possible pullbacks and possible buybacks. But in the end, the ultimate person who holds the key to your portfolio is you. Do I follow a methodology to draw waves from a blank chart? Sometimes it's a bit hard as a beginner. The Elliott Wave theory is very, very difficult, man. It is a very difficult theory. And for someone that's just starting out, it is going to be very bloated, especially the wave theory. I mean, even me being certified, I'm also a very strong opposition for the wave theory when it comes to the actual literature, meaning that it's poorly written. But if you're able to get a grasp of it, the book will start making sense. But as long as you understand the rules and guidelines, the basics of it, understanding there's open interpretation to the theory, then you're most definitely on the right track. And then there's the practicality aspect of it, which takes a little bit of time, understanding and how to narrow down the scenarios, understanding the probability perspective of it. Yes, it's still in the cards, so that is one scenario that I did talk about. In fact, we'll talk about the larger time frames right now. Maybe even talk about starting off with even a diagonal idea, right? Because it is a very interesting scenario that I have been tracking. It's not the most, well, let's just say it's the most subjective count, because a lot of people are probably going to say this is a very odd count, but it is definitely a possibility if you're able to utilize the wave theory in your advantage. Especially if you're seeing it from a market psychology perspective, which the Elliott Wave theory does a fantastic job of integrating. Remember, the wave theory is all about a combination of different things. It's about price action structure. You know, I think I had another debate on X about time uniformity. That is also definitely a very important aspect of it. We have also structure, how these patterns are playing out, the actual pattern recognition, how to verify it from a timing perspective. And then you have the overall market psychology aspect, which does help, which is integrated more or less into the actual wave theory. We have, you know, these wave threes being absolutely ballistic in theory, being the longest wave in theory again. Those, you know, small little tidbits here and there, it's about making sure that you have the proper organizational skills more than anything else. So this idea is definitely something that I am tracking. It's not my most primary idea, but it is something that is on the radar here. And I would say this scenario is more heavily emphasized on the time, not the timing, not the overall structure or the pattern recognition, but just more of the market psychology aspect, where we have been in a super cycle run since the inception of Bitcoin, right? So is there a way where we can actually end this entire cycle from an Elliott Wave theory perspective? And this is the best way I can count it, because otherwise we're just going to stick to what the average Joe really understands, which is understanding it from a cycle perspective, or having cycle perspective, which just continues the uniformity of these nested structures of 1-2s, right? Now we have to talk about how this might happen. There's really no other way to put it than what could be either one, where we work in what could be a expanded flat idea, which is pretty much at peak validation if we're looking at the fib extension pocket zone for this B wave, and then we go for a bear market now, which is absolutely possible. I mean, don't count that out. But to me, it goes down to and boils down to this here, which is where we at? Come on, let's get that scenario out of the way, which is this here. Let's go. Let's go. There we go. Which is this, the uniformity aspect or approach on the halving cycles, which is what the average Joe is currently seeing. We will see a bear market pullback. My targets range around $150,000 to $300,000 per Bitcoin, and then we go for a pullback. But, ladies and gentlemen, before we get into these scenarios, please make sure to hit that like button, subscribe to the channel. We will get this started, and it looks like we just hit that goal. So one last time, ladies and gentlemen, welcome to the live stream. Thank you very much for joining me here. We do these live streams once every 2 weeks or so, or once every month or so, just depending on my mood. But it is probably a good time to talk about it since we did get that massive liquidation event with a strong 5 to 6% pullback. And we are now going to be talking about whether we are still in a bullish continuation or a bearish continuation. So that being said, thank you very much. Subscribe to the channel, like the video if you can. It does help support the channel. And we are going to get started right now. We're going to do a top-down analysis starting with Bitcoin, and then we'll go from the lower time frames, talk about what kind of structural issues that we may be coming across, how can we narrow down the scenarios as best as we can. But for now, we'll start with the top-down analysis. And like I said, nothing has changed here. We are working with two different scenarios. One is more subjective. One is more of aligning towards just a uniformed approach with how everything is being built up since the inception of Bitcoin. Now, as you can see, we're kind of just trying to, more or less figure out where the general top may be for Bitcoin. And to me, I would say $150,000 to $300,000 Bitcoin seems like a more reasonable approach for how this bull market is going to be ending. So that being said, we are quite late within the bull market cycle, but we are still quite early within the trend to actually confirm this idea. So understand the two differences. We're late within the bull market, but we're still quite early within the trend of what could be an extended fifth wave of the minor degree to the upside. So in my opinion, if we're just labeling it, I usually like to work with 3 degrees of hierarchy, but here we have 4 hierarchies of degrees, just because we do have 4 halving cycles, right? That's being currently witnessed or observed. So that being said, my approach is just very simple. It's just we have a series of 3 4 5s, 3 4 5s, and 3 4 5s that has happened after each cycle, and it makes sense. We do have pretty nice looking, wave structures from an Elliott wave structure of a 5-wave impulse or an idealized 5-wave impulse. But this is the only cycle where we're actually kind of branching off in terms of the timing aspect of where these 3 4 5s are occurring. You can see this wave 3 4 5 is happening or has happened at an earlier stage before the halving cycle. And that to me is a little bit of a different approach, right? The market maturity theory does come into play where we might see possibly a different structure being built here. And that's what we're trying to confirm here on a daily basis. So that being said, since we had this wave 3, to me, when you're comparing these wave 3s to the previous cycles, it's quite short, right? you can see how long these wave threes were occurring in the previous cycles. But more importantly, from a timing perspective, they all happen after the halving cycle. In fact, the reason why I'm still seeing this extended fifth wave is because of that. And the reason we had this short wave three is where we can kind of safely assume from a market psychology aspect that a lot of people were actually, they missed out on this wave three to the upside, right? They missed out on this wave three, so it has to be made up from this extended fifth wave. Now, okay, that's subjective, right? Like a lot of people are saying, yeah, but fifth wave don't really happen. Well, I can kind of digress and I can kind of argue against that point. If we go straight back to the literature from the Elliott Wave principle, we also can, grab out of the theory that extended fifth waves do usually happen within commodity markets at a later stage of the markets, right? So you usually will see a commodity market like gold, for example, which is also observing, very interestingly, also observing an extended fifth wave to the upside. And Bitcoin is also kind of observing from a self-fulfilling prophecy standpoint that an extended fifth wave might be in play as well if you're taking the context of all the smaller waves and you're using it within reason. So that being said, I would say the logical conclusion for me, again, you don't have to agree or necessarily agree. It's just how I'm currently seeing it. And that's the beauty of the Elliott Wave theory, which is very highly based on interpretation. And right now, I am seeing this as a 5-wave move as the final conclusion for this extended minor fifth wave that will end it. And we will still be on time for how we have usually ended it for a bull market, which happens usually quarter 2, quarter 3 of the next year after the halving cycle has occurred. So that being said, I would say that this is a great time to kind of make up for this missing slope that we had, because it would be very strange if we had it end here, right? And we just say that the 1-2 is now working now for the downside. And this would be way too short, which is absolutely fine in that sense as well, because it has been getting shorter in these cycles, and the bear markets have been also getting shorter in the cycles as well. So it's just different ways of interpreting it. But in my opinion, simplifying it as much as you can, not focusing on, one specific relation into, the formity, which is, the structure of the actual pattern recognition. Don't focus too much on the time aspect, but more have a general balanced approach, which is this here, in my opinion, the best way I would interpret the price action. However you're interpreting it is absolutely up to you, but this is how I would currently see it. Now, what if this is all just a bloated series of 1-2s? Because in the end, it is really low in probability if you really think about it, right? But Bitcoin has been keeping that traditional sense alive in terms of what the average Joe expects, right? So the market psychology is also accounted for here as well. Now, in my opinion, there is another way we can see this, which is a diagonal idea. When you look at it from both linear and also on log scale, it does look quite nice. In my opinion, I would say that this is also a contender for what could be ending this cycle. But this forms a little bit of a bias more on the market psychology aspect, which is why this downgrades to more of an alternative idea, because not everyone is seeing this. It's just more of an assumption than anything else. Meaning that from a market psychology aspect, it could really mean that this may be the first of many things that has happened since the inception of Bitcoin, which was a super bull market cycle. Are we finally going to be seeing what could be the slowing down of the growth curve, meaning that we have a possible fifth wave finally ending? The only way I can finally fit in a possible ending of the cycle using the idealized 5-wave move of an Elliott Wave theory pattern is that we have what could be a wave 1, a wave 2, the wave 3, and then the pandemic crash was a sideways consolidated wave 4 with the truncated short wave E here, and everything else is now just working as corrective waves. And very interestingly, this can also be interpreted as a corrective wave that we've had since the bottom of $15,000. This is just more of a corrective rally than anything else. We'll have another corrective move back down, retest some very interesting levels of support, and then another 3-way move up to kind of fake out everyone. And that will essentially erase all of the leverage longs, all of the leverage shorts, and then spot traders from a domino effect idea will sell off their portfolio. Basically, every institution, long-term investor, and retail will take profits, creating a cascading domino effect that will put us in a multi-year bull or bear market, essentially almost 5 to 10 years of a bear market. Does that mean it's going to happen? No, because we have different expectations, right? Which is the first scenario that we actually kind of pillow on, which is the main idea. It's not the best idea, but this is not the best idea as well, right? So it's just a matter of balancing it based on your interpretation of how you're seeing it. You have to have the right approach from the market psychology aspect. And right now, this is just one of them that focuses heavily on the market psychology aspect of that. Everyone is finally ready to sell off their Bitcoin positions. Again, it's not, of course, what everyone's going to agree on, that everyone is ready to sell off their Bitcoin. In fact, I would argue that people are still onboarding on Bitcoin, and still we're seeing this new fluctuation and new onboarding of new users in many different ways and fashion, such as the 401k retirement plans. How are we going to get these boomers back into the market? How are we going to get Gen Z back into the market? This is what we're talking about. So this is why I'm saying that this is just more of a subjective approach, but my idea of having this halving cycle is just more of the general approach, and I would say that this has the most heavy weight in terms of the actual structure, even though there are some subjective bids along the way. So this is how I'm currently seeing it. I'm still seeing some higher levels. I would say that from a macro perspective, we are now finally officially in the orange box. I would say that this is possibly the best way of looking at it. So that's the overall top analysis. Now let's get into a more zoomed in analysis. I think people are interested in how things are now being built up. I think that we can start talking about how this final fifth wave is actually being approached and how we can confirm it. Well, the only real way is, again, extend a fifth wave, right? The only way we can extend this fifth wave is making sure that we have organized the first four waves as best as we can. And it seems like this is the best way we can do it, other than the fact that we have an actual fifth wave completion here, which was originally our scenario. But after breaking this previous high, it has definitely removed that idea that a fifth wave is out in terms of actually completing the trend. In my opinion, I think that having this as a wave 1, 2, 3, 4, 5 is actually probably the best way. Now, the only subjective approach is whether you actually want to believe an extended fifth wave is happening, but I gave my piece of evidence on why this is actually the case. I still have to update this and how this wave 1, 2 is actually playing out. But overall, the same idea. We have basically just these nested structures of playing out. Now, really, the next thing is that since we have compounded every basically possible wave 1, 2s within this extended fifth wave, it means that we are running out of time. It is a time ticking bomb, and we need to get out of here ASAP, right? ASAP meaning that these nested 1, 2s, it starts to become less of a probability perspective, right? That's why we need to also understand that there's alternative scenarios. So that being said, there is nothing wrong with this count. I think that we can still work within what could be a series of extensions within this fifth wave. So it's just very highly extended, right? This is what creates these fifth wave extensions. And then you have the third wave of third wave extensions that you have to also take into as an obstacle within the shorter time frames. But overall, from the conformity and also the unilateral kind of approach of the first four waves, I would say it's very objectively clear that the first four waves is very structurally sound, meaning we do even have observation of alternation, meaning that we have what could be a sideways wave 4 here, or sorry, a sharp wave 4, and then a sideways wave 1, 2 here, both observing alternation. Again, another evidence-based approach, to my opinion, just using the wave theory approach. I know a lot of people don't like to just solely base their ideas on what could be a fifth wave to the upside as an extension, but it is pretty much the only logical way of approaching this, in my opinion. I can't really figure out any other way we can do this. I mean, again, the only way that we can end this entire structure is saying that there is a fifth wave conclusion, right? Meaning that this fifth wave has to be ended here. And I absolutely agree that there's definitely a possibility we would change this back to an intermediate degree structure and then say that this here is now all just noise and we're working correctively to the upside, and we would just measure based on what could be a wave 1, 2 structure as a flat idea. So we are now within that region. But as you can see, when you double test or double top these types of regions, it gets a lot more trickier to actually believe that this is actually happening. Usually you'll see a rejection point and then an immediate reaction off that point. And that's the point of these expanded flat ideas. From a market psychology standpoint, you have the first corrective wave down, and then the second corrective wave up, you'll see an immediate rejection, because this is where that exit liquidity point is for the bulls, and then this would be the exit liquidity point for the bears, and then you would continue up the trend. And you can see we're running into a problem from a structural and timing perspective, which does not seem like it is a WXY or even an ABC to the upside. So that problem is resolved in terms of a timing and structural perspective. I think the next possible idea that we can put it as is either as the impulse or what could be a leading diagonal going into wave 1 of the minor degree. Whether we go for one more high and then we come back down for a wave 2, that's a possibility. And until we actually break this confirmation with this trend line, which it looks like it's very close to doing so, this wave 1-2 is still most likely the case at this point, in my opinion. I've shared this idea on my social media on X. If you're not following me on social media, please do follow me at xforceglobal. I do a lot of my daily updates there as well. But you can see this also doesn't change the implication of the larger time frames in terms of how we can be achieving that larger fifth wave extension target, right? So the only real way is putting this as a wave 1-2 intermediate degree, and then we would have this as a minor degree wave 1-2, where now we're working in a leading diagonal of some sort going into that fifth wave, which looks like it's technically complete. So the best way I can organize this and put it into more layman's term for everyone who's having a hard time understanding which scenario is the actual scenario, think of it this way. When it comes to pattern recognition, you have an actual pattern completion here, which is the leading diagonal. So this puts this scenario, even though we don't want to believe it from an emotional standpoint, if you're approaching this market from an Elliott Wave theory perspective and you're approaching it from a non-biased perspective, this scenario currently has the highest weight, okay? Because it has a technical completion of the actual pattern. However, the higher risk reward scenario is the 1-2 scenario. This has a higher risk but higher reward in terms of the immediate instant gratification approach. This is now just in the confirmation stage, right? So one is in the confirmation stage and one is arguably in the technical completion phase, where we're now finally looking for a 1-2 pullback of the intermediate degree or the minor degree. But the overall implication, as you can see, look at all these lines. It's basically all the same story. It's just about whether you are well positioned in the market, where you're positioned in the market, where your personal risk management is going to be coming into play. And that's why we're seeing such low volume in this current local time frames. So this is why it doesn't really matter in which directional route you take. I think there's going to be swing traders who will find a little bit more substance out of these two scenarios, because I'm sure there's a lot of people who are not positioned at all on Bitcoin but want to take a short position. There is that small possibility and vindication that there is going to be a 1-2 pullback. But if not in the case, we do know that the general direction is still to the upside. So in my opinion, when you have these two types of hybrid approaches where one is coming to an end and one is coming to the beginning or actually coming to fruition, it's hard for me to say which way it's going to be the actual hard cold case. In my opinion, what you should have done and mitigated against this type of risk when it comes to these two types of scenarios is you should have been already positioned at these levels here that mitigate both of these scenarios. One, if it goes up, at least you're exposed and it's going to the upside. Number two, if you go for a pullback, at least you're still well exposed and you can start to identify whether this is going to be an actual 1-2 pullback or actually going into a bear market, because that risk is still there, but you're still well positioned that you can get out of your position in profits, right? So that is the actual way of approach that you should be taking. Understanding from a larger macro perspective is far more less riskier than it is trying to find a position within these regions over here. But nevertheless, people do like these types of approaches, and why we like to look for these types of pullbacks, because it does give us a little bit more substance into the actual creation of these impulses and also corrective waves. So again, to summarize the medium time frames, this is the best way I would say it. I mean, it's cold hard conviction at this point. I mean, one set of group is just going to say that this is the beginning of a bear market. In my opinion, I don't think that's the case. It's just far more evidence that this is working in a series of 1-2s, or at least a diagonal of some sort, or this, where we're just working in this diagonal and it's coming for a 1-2 pullback where we retest again this level of confluence zone. So that's one way of seeing it. That's the medium time frames. In my opinion, both of these scenarios, the implication is more or less the exact same. Absolutely the exact same, in my opinion, in terms of the actual resolvement. And that's the point here, ladies and gentlemen. I think a lot of people focus too much on the theory aspect, which is very important. As long as you have the basic rules and guidelines down, I highly, I would just wish there was so much more people utilizing the wave theory. It's a fantastic way and tool of understanding the general direction of the markets and where market psychology actually is applied and not applied. And it's one of the only fascinating theories that actually give you an if in that scenario type of approach, where you actually have an actual end goal, an actual beginning goal, and an actual prediction goal. And those are the things that you want to be looking out for when it comes to, using it in your arsenal of tools. And the Elliott Wave theory is very difficult to start off with, but it's one of those things that's difficult to master. It's actually quite easy to actually learn the rules and guidelines if you have at least at least a small brain of at least understanding and memorizing things. But once you start learning the practical approach, it starts to become second nature than anything else. And then once you start understanding the little harder concepts of the actual formality of how these structures playing out, pattern recognition, how that works with the preceding, the adjacent, and the structural current waves, all of these into mind, that's what creates the actual talented wavers. And that's when it becomes a lot more difficult and the subjectivity starts to approach. And your goal as an Elliottian is to remove as much subjectivity as possible. But if the end goal is the same, this is the point. If the end goal as an Elliottian is the same, more or less, it doesn't really matter what happens here, in my opinion. Because you're not validating, or you're not, providing any statistical approach, or you're not trying to provide to the what may be already a statistical approach to this current theory. There's no real statistics in terms of the actual hit rates of these theories. I've seen this one study that actually talks about the actual statistical hit rates of these these patterns, that is, and how often they actually play out, what the rates of the these 1-2s and 3-4s actually play out. But they're not really accurate. They're more of a fixed approach than anything else. So this is why the theory, in my opinion, the Elliott Wave theory, will remain a theory, but will be continuing being built up. In fact, I'm one of the few people who actually helps provide, some approach to how these wave theories actually play. And one approach is this, like, for example, this wave 1 is quite long in time, right? But, when you have these structural overlaps, it becomes to what is a diagonal in the actual pattern recognition. But the original theory, for the past 20 years, people were talking about, oh, wave 1 can't be longer than wave 3. And this is where we actually help to, create some kind of or help combat that, and we kind of help remove that idea where wave 3 has to be longer than wave 1. That idea is now completely out of the books and now is in actually the Elliott Wave theory. So this actually helps. So that being said, this is another way of seeing it. Now we all have to talk about how we can actually build these structural 1-2s, or this actual diagonal that I am now starting to become a primary scenario that I've also mentioned in my social media. So let's talk about that. Let's go into the local timeframes and talk about it, how this can be actually formed. Because the only way we can actually continue this 1-2, 1-2, and now another 1-2 in the making here, is really this, where we have a 1, 2, 3, 4, 5 to the upside. We originally talked about this being even a possible flat idea, where we had this 5 here, this 1 here, and this wave 2 ending here. This idea is now completely out of the picture. And you can see this is why the local timeframes, it becomes so much more difficult to play out, right? So this 1-2 flat idea completely out. We had that breakage of that low. Immediately we had to swap bias. And again, this seems a little bit forced in my opinion. However you want to see this as an impulsive structure to the upside, I just have this as a wave 1, 2, 3, sharp 4 again, and then a 5. There's going to be people who are saying, oh, the alternation, you're not, respecting alternation. And, those people I try to filter out, because those are all just merely tools, ladies and gentlemen. And this is why I always mention, there was this debate that I had also on Twitter, which is understanding the emphasis of each respected component of how a degree is formed, which is price, structural, and let me reword that. number one, you should understand it from a pattern recognition perspective, right? How these actual patterns are being formed, or these motive waves, or these impulsive waves, right? And then there's the actual structural component, right? The actual depth, the Fibonacci retracements, the overall depth, and the overall idealized structure, and the overall look of how the structure is being created. And number three is time, which also kind of overlaps and intertwines with number two, the timing perspective, right? So you don't want to emphasize one specific timing or, you know, structural uniformity aspect, or the actual pattern recognition of it, because there is always going to be subjectivity on which way you want to be doing it. And this is why it's important as an Elliottian to understand and to have an open mind about how these structures are playing out. And in my opinion here, this would be the best way I can conclude and reduce as much subjectivity as we can without forcing too many of the counts. And that would be this wave 1, 2, 1, 2. And you can see why I'm starting to lose a little bit of faith within this 1, 2 count as well, right? It just doesn't feel right. And there's sometimes a gut feeling is also very important. Just doesn't feel like we're creating another 1, 2. This move here, we've already, you know, disregarded a flat idea. Why are we going to again assume another 1, 2 is in the making here? And that just seems like it's going down a dangerous path or a route. But again, it's valid until it actually breaks this $111,000 levels, which is why it's still on the radar. And I think it's very possible that we can still continue the trend. And that leads me on to the second scenario, which is this scenario that I've been sharing quite a bit on my social media. And I think a lot of people are actually starting to think that this may be the actual pattern recognition here, which is a leading diagonal of some sort, which means like this is going to be a WXY going into wave 1, another WXY for wave 2, an ABC into a wave 3, an ABC into a 4, and another WXY into wave 5. That is now a technical sound complete leading diagonal. Can we go up for one more move and actually create another high? Sure, absolutely 100% possible. It's very doable in terms of the actual structural perspective. But if you look at the actual evidence-based approach here, very interesting, okay? Because if we measure the actual internal waves of these structural moves, of this corrective moves, this WXY, we have what could be a very important zone of in terms of equality. We have it measured in between the 61.8 and the 100% level. We usually want to have it hit the 100% level, but the follow-up lead-up counts 100%. 100% in between the 161 and 100%. This is the most common zone. Another one here, exactly 100%. Another one, 100% and 161.8%. So you can see all 5 waves more or less respect their internal counts, but 4 out of the 5 waves, this one here, waves 2, 3, and 4, and then 5, do portray more of a corrective structure than it does impulsively, right? So the only subjective approach, which is where I personally have helped with the wave theory, is this move here, that can be interpreted as an impulse structure. Now, in real-time analysis, when we were looking at it from a structural perspective back when we were talking about it, right? So if we go back into time and actually talk about what has happened in real-time analysis, of course, you want to be labeling this as some kind of impulsive structure in real-time analysis, right? But now that we have more data, more timing perspective, more of a wisdom of approach of what kind of Elliott Wave structures we can be approaching it with, is now that we have it as what could be a leading diagonal, right? And this helps us predict the future waves, right? So that's, in my opinion, a very compelling argument here. And then we have more pieces of evidence, right? It does get a little bit more difficult in terms of actually confirming it until it actually plays out, but we do have some more evidence in terms of the fundamental and the self-fulfilling fulfilling market psychology aspect of it. Usually September is a month of red, right? In terms of the actual if and that. If we look at what happened here, if we have 2 reds, 2013 and 2014, you follow by 2 greens. And if you have 2 greens, it's followed by a sea of red here. But now we have 2 reds, 2 greens here. And the only real data approach that we have is this. So is the month of red always, or the month of September always going to be a sea of green for the next 5 years or so, right? that is another way of looking at it. And that, in my opinion, albeit a little bit too tinfoil hat theory, in my opinion, makes me want to believe that September is going to be a red month. And it's also showing within the wave theory, which is we have a technical completion of a larger leading diagonal. We are looking for what could be a larger 1-2 pullback. And it aligns with the timing perspective in terms of this being here, a larger 1-2 as a minimum expectation or variant of it as a WXY. Depends on what kind of pattern is playing out. Wave 2 can be any corrective pattern other than triangle. This just seems like the more logical approach. And you can see followed by what could be a end in October, we could finally move up after the month of September, which usually is followed by the strongest month of every single month, which is, aside from February, which is usually the end of the bull market. This is usually the beginning of the bull market or a continuation of the bull market. You can see we have 10, 28, 39 percenters, 47 percenters, 60% back in 2013. You can see traditionally, the month of October is usually a very green month, and that aligns with the timing of this, and we should be continuing the trend regardless. So from a timing implication, from a macro perspective, very simple. We're working in a very bullish structure. We're working much higher. We're going to be working for much higher levels, and that's why it goes back and boils down to what I was talking about. From a risk management perspective, you should be well positioned already back over here when the risk was actually the highest. The risk is actually very high over here because now you are playing with fire in terms of actual continuation pattern or an actual pullback pattern. But right now, if we're talking strictly from a probability perspective, I would say that this scenario has the highest weight. And I've been sharing this count for a few weeks or so now. And it just seems like a lot of these corrective structures are more corrective than they are 1-2 pullbacks. Okay. So that's that. Now I think that's about it for how we can be looking at Bitcoin, right? Yeah, we've talked about how this 1-2-1-2 could be playing out. And then we talked about this diagonal, which now has the higher weight. If I had to label this, I would say 60% probability is now going for this and favoring this diagonal scenario. And then 40% is now this. So the tables have turned. This was originally 60% because there was no real confirmation of a 1-2-1-2. We never really had a wave 3 follow-up in any of the degrees. So this was always a 60%, but now the tables have turned, and now this is now 40% probability, as opposed to where now this is now a 60% probability, right? So the tables have shifted about 20% in the direction of this being a more bearish structure. I would say that we're going to be working for a larger 1-2 pullback. Now the local timeframes is something that we're going to be talking about, but I'm not going to be talking about the local timeframes. We are going to be talking about how this 1-2 with more of the confirmation aspect. If you want more of the local timeframes, please do join my membership Discord group. I do give my more in-depth analysis there. If you're interested in joining, the links are in the description below. If you're interested in joining and getting a more insight on the local time frames, they're a lot more riskier, of course, but I do my best to make sure that it's organized in a way where it's also applying to the larger time frames that we have here that we always discuss on the public analysis. So if you're interested, again, the links are in the description below. And if you're also interested in just getting a taste of what's happening in X-Force Global, the link for the Patreon, where I do 2 updates a week for Bitcoin, is also in the description below as well. It's only a 2-week video update, and those are very helpful for a lot of people as well that usually help eventually go into the Discord. So that's that. And then again, yeah, these are just basically the 2 scenarios. Now, why am I seeing this as a more 60% probability now? There's a little bit more evidence behind this, not just because of this, but we need a more concrete evidence, right? It goes to my Ethereum analysis that we discussed as well, which is a possible WXY correction here for this wave 1-2 of the primary degree. Now, there's also that, overlapping perspective that this can just be an ABC to the upside, which also helps in terms of that. But again, since we're more or less bullish, I think everyone is on the same page of being bullish on the macro, is that we do have what could be a wave 1-2, and then another 1-2 here that's in the making for a primary degree that could be helping also that 1-2 pullback that we're looking for on Bitcoin, right? But if we're going to be expecting for a large pullback, is Ethereum able to also pull back for a larger 1-2 as well? Well, I think there is a possibility. I think I've discussed this in X as well, where this could be just a wave 1, this could be a wave 2, this could be a 3, 4, 5. Now, I know people are going to say, oh, you're not, respecting the idea of alternation. You can't have 2 sharp corrections as a wave 1-2 and a 3, 4. But ladies and gentlemen, that's just a guideline more than anything else. And this is what I'm talking about. You have to be very progressive with your approach in terms of how this is working with the Elliott Wave theory. You want to be applying as many guidelines as possible, but not treating them as hard rules, right? Apply the hard rules to the best of your ability, because those are what provides you the actual idealized structure. But the actual idealized approach is going to be boiled down, and the interpretation that is going to be all boiled down to the actual guidelines. As the more guidelines that you're able to apply to the wave theory, the higher the chance that it might actually play out. And even then, it's still more of a probability increase than an actual hard statistical approach on which direction it's going to be playing out. So this is another way we can be seeing it that can help the idea that Bitcoin might be working for a larger correction, that this one too is now actually going to be extended in time. We actually might go for a large pullback for Ethereum, which might put us another 30 to 40% to the downside. But in my opinion, I'm having a little bit of a difficult time, where I still believe that this is just working in a primary degree where we're nesting everything. I like to see this as a finished impulse to the upside, as more of a 1-2 building narrative than anything else. But again, we'll see how this timing all aligns, and we'll have, make sure to understand the actual synchronization of the actual Bitcoin chart. Okay, so that's one as well. And then if we go to XRP, now XRP, I talked about what could be a leading expanding diagonal, because XRP very strangely absolutely loves leading expanding diagonals, right? We have a leading expanding diagonal over here. Which also I help provide, by the way, in the theory of actually implementing this in the rules and guidelines of the actual version of these Elliott Wave theory within the Elliott Wave principle. This Wave 3 also observing what could be shorter than this Wave 1. However, since Wave 5 is longer than Wave 3, is actually the rule that a lot of people are starting to apply. And I'm very glad people are actually starting to apply this, which is that, we do witness these a lot, quite a bit, where we see Wave 3 being shorter than Wave 1, as long as the rule of Wave 5 being longer than the Wave 3 of a leading expanding diagonal, that is, if it's a contracting variation, you want it to be shorter than the Wave 3, but the implication is the same, that Wave 3 has no relationship to Wave 1, because the Wave 1 is usually the kickoff stage than anything else, right? So that is what I'm talking about. Now, this here as a WXY structure, I would say that's pretty much the only way we can see it. And now this Wave 1, 2 of the intermediate degree is pretty much the confirmation stage again. Now, we have two ways of approaching this. One is XRP is very strangely staying above its previous low against other altcoins. It is looking like it could be working an expanding diagonal here as well. This is where it actually respects the old rules and guidelines, where Wave 3 is longer than Wave 1, Wave 5 is longer than Wave 3. This is a perfect textbook example of what could be a leading diagonal, expanding variation, that is, as a possibility of a 1-2 in the making here. Now, what could be another approach for this? Well, we can pretty much change everything here, right? We can say that this was the impulse move to the downside. This is a triangle here. There is a triangle here, very, very obscure triangle, but it is very possible. There is that 1, 2, 3, 4 as a triangle, doesn't overlap into the territory of Wave 1, and then you have a Wave 5 to the downside, or you can even just label it here. I don't think it even overlaps with Wave 1. Yeah, it doesn't. It doesn't really matter. I had a triangle here on one of my micro time frame counts, and that leads us into a Wave A, basically. And then you have a Wave B, and then you have a Wave C. This would extend your correction a little bit longer, and it doesn't really change the implication of, again, it's just moving down and retesting some of the major Fibonacci levels, which is also to be expected around the golden Fibonacci levels. Yep, there we go. That should be, if we are assuming that this is the actual top, we can start finally assuming the actual targets using a trend-based Fibonacci extension target. And like that, you have a Fibonacci confluence zone now. The normal Fibonacci retracements of the golden Fibonacci, 61.8, 78.6. Ideally, you don't want to be going this deep within a very strong bull market. Ideally, you'd usually see it hit the 38.2, the 23 point, whatever your Fibonacci lowest minimum Fibonacci level that you're looking at. Usually you'll hit those during a very strong bull market, but it doesn't have to, again. But this one too would be seen as an ABC of the intermediate degree again. Actually, it would be a minor degree because we are working in the intermediate Wave 1, 2. This is how we would look at it. And again, it is struggling here. This is hard to find as what could be an impulse to the downside, because that C wave has to be impulsive. It looks like we're still kind of ranging here. So there is a very strong possibility that this can also just be working in that leading diagonal, but it really doesn't matter. We know the expectation of what could happen if we do break down, and this would be a great DCAing opportunity to buy more XRP around the $230 to $250 levels that helps us bring us into higher levels. I think that would be be the best way to approach the actual strategy and tactical approach on how you should be building your positions here. Don't just go blindly in here, in my opinion. But again, everyone is positioned differently. Everyone sees the market differently. Everyone trades the market differently. But I'm just giving you the best way to approach this using the wave theory. So if we have this scenario, fantastic. You should already be positioned and exposed to the markets. But if not, you shouldn't be building more positions here. Where you should be building more positions is that scenario that I just mentioned, where we have an A, B, C to the downside. $230 to $250 levels is what I'm currently eyeing as the next potential support zone, and then we're off to the races, in my opinion. And again, I think this goes back down to the timing perspective. We want this wave 1-2 of the intermediate degree to be smaller than this, and this is another great example where, from a theory perspective, yes, we want this to move down ASAP, but markets don't play out expectation-wise as fast as we want it to, right? In my opinion, it's just due to the fact that we don't have a clear impulse to the downside. It looks like it's going to be drawn out a little bit on time, which is going to be putting at risk in terms of the timing of this larger 1-2 as well. Is this going to be larger in time and structure against this parent degree wave 1-2 of the primary degree? Well, that's something that you have to make a decision and interpret on your own. And in my opinion, this is why it goes back to that beginning thing that I was talking about. There was this debate that I had on X. And this is actually a perfect example of it, where a wave 1-2 can actually sometimes be longer and both in structure and in time if the context of the larger waves and the hierarchy of the waves is structurally sound. And it is. We have a larger 1-2 here where this is most definitely a corrective WXY to the downside. This could potentially be a wave 1-2. Now, it's risky in terms of the actual approach, but it's not entirely invalid, meaning that if it does extend both in time and in price, you're going to have an alternative scenario with that in mind, and we can still continue the trend even if this is larger in time and in price and in structure than this parent degree wave 1-2. But again, there's going to be people who want, I'm very OCD about my accounts as well, and I would like to have it play out perfectly in time as well, where I just want this to happen right now and move to the downside right now to give a very nice offsetting look and the right look for how these corrective structures play out to help mitigate what could be larger in price and time, structurally and in time, for this WXY or ABC to play out. That's why we have to be very open to how the markets are actually interpreted, right? So in my opinion, these two scenarios I feel like is the way to be looking at it. So now that we covered Ethereum and XRP and Bitcoin, let's talk about some questions now. All right. Now, many are talking about the imminent crash and end bull run and quarter 4 of quarter. So I think this person is saying now that many are people talking about this imminent crash of the end of this bull run to end in quarter 4 of 2025, how do I see it? Well, I already gave it. I don't see it ending now. It's just very difficult for me to see a wave count, both in time and also in structure for the macro counts for this to be ending here in 2025. It's very difficult for me, other than the possible this being the end of something, where we're now ending something of a B wave and the end of a larger degree wave 1 here. So that means is that we're working in what could be a larger A, a B, and then a C here. And then the move up was also a 1, 2, 3, 4, 5. And now we would be working in a expanding diagonal. But you can see the context is very off here. Doesn't make sense here, this move here. So that's the only way we can end the actual bull market, in my opinion, if we're going to be actually considering a bear market scenario for this year specifically. I don't see that happening. Don't you see the possibility of an intermediate correction? It could be an expanding flat wave. I'm not exactly sure what you're talking about, but yeah, actually I don't know exactly what you're talking about. Sorry. Hey there, a few months ago you have said that the ending diagonal and wave 5 as an alternative scenario, is that still in the cards? Yes, that is. So I did talk about that at the beginning of the stream. Thank God I went over it. How do you interpret the triple bearish divergence? Look, there has been bearish divergence. Okay, so this is a great thing for the macro, if we're talking about bearish divergence specifically, okay? So let's talk about the bearish divergence that may be witnessed on the larger time frames, okay? So I think there's a lot of people talking about, oh, there's bearish divergences happening on the micro and the larger time frames, even on the weekly time frame. This one is what you're probably talking about, right? Very, very possible that this could be the actual true divergence that we should be witnessing. But how many bearish divergences have we had that has been negated on the weekly and the monthly time frames? Those are very self-fulfilling prophecies, in my opinion. I don't think that they're very reliable. But the most important thing about how to approach RSI divergences is understanding that there is a default setting for the RSI. The RSI default setting is at a 14, all right? The 14, meaning that there's only 14 inputs. The RSI length here, 14 days of candles that is actually being utilized for how this should be interpreted. So this means that if you have a long period of drawn out candles, the RSI divergence becomes almost irrelevant, in my opinion. So if you're talking about a divergence that has been playing out since even here, which is usually the highest point, there's just no point in talking about a divergence that's been playing out for so long, because the default setting is at a 14 length. You can't just be applying that there's going to be a large bearish divergence, because you're going to have to say that for Tesla, you're going to have to say that about Amazon, you're going to have to say that about Apple and so forth, and every other asset out there. There's just no point in talking about it. The divergence, in my opinion, works best on the daily time frame, which is showing a little bit more evidence on the daily time frame than there is. But you have run into the issue of seeing these larger pullbacks playing out. But most importantly, the only real divergence that actually has played out, but still is not really based on anything, is this here. Actually, you don't even have it doesn't even have the highest point here, so it's not really even a divergence at this point. Is it? Nope. Yeah, it's not even divergence at this point. So there is no real triple divergence on the daily time frame here, in my opinion. So it doesn't make sense, in my opinion, to be applying that. But if it did and say that this was the highest point, it would have already played out. So in hindsight, an RSI divergence has already played out. You don't know the actual correction depth of what's going to happen after an RSI divergence is being confirmed. So that's something to keep in mind. Can the market actually crash while the doom and gloom channels on YouTube are saying it every day? Brother, that's up to you. I've already given my interpretation on that. There is a way, but it's not the best way. No way we would have a bear market like that. Institutions would buy it back or government. Well, your answer's right there. You two fight. Dreamstorm and Skill Robbles, you fight. Both of you fight. I was thinking a contracting ending diagonal wave one terminated at 74,000 March blah 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 before. Okay, so I think there is some speculation going on. Someone sent me a DM. I don't know who it was. I think it was like one of the bigger YouTube channels that actually talked about this ending diagonal. Someone sent me a video that this is the ending diagonal right here. If you're versed in the Elliott Wave theory, and you're saying that this is the ending diagonal, you've got a lot of work to do, my friend. Because, number one, this move here does not look or resemble whatsoever of a corrective structure. This is definitely impulsive to the upside. Sure, you can have the three-wave correction here. Three-wave corrective move to the upside. Sure, corrective move. This is definitely a corrective move. Number two, yeah, the new rules and guidelines, you know, we don't have to have an overlap of this wave one. There's just so many red flags about this count. This is not, in my opinion, an ending diagonal of any sort. Now, people are asking, okay, how are you going to fit into that? You know, there's a leading diagonal that I originally anticipated, right? Which is this. Can you fit this into what could be the end of a fifth wave here? No, in my opinion, as well. Because you run into now this is where I absolutely agree from a timing perspective. If you have a 1, 2, 3, 4 here and then a 5, you're running into the problem here as well. Does this look like a clear impulse? Again, the right look doesn't seem likely. It's valid, but it's unlikely. Actually, extremely unlikely. See? So there's just no way to fit even this leading diagonal. So the real logical or the ending diagonal, the real logical conclusion is that using, you know, the process of elimination is to put this again, we objectively clear that this is impulsive, right? This would be the beginning of a wave 1, 2, 3, 4, 5 of an intermediate. Now you're utilizing this properly in the context of all the surrounding waves. So you now lead this into a wave 1 and then a 2, 3, 4, 5 of a minor degree. So you can see now it's organizedly sound, it's structurally sound. Now the macro is where you're going to be fighting against the subjectivity of whether this is really an extended fifth wave or not. That's the only real subjective approach that you're having. So that's the way you should be looking at it. There's no real ending logical conclusion and structurally sound ending diagonal in both the larger time frames and also the shorter time frames. I'm having trouble with the Telegram app. I can contact you about the app subscription. I need help. Please contact me on Discord, my friend, at Express Global Official. Elliott, okay, let's see. Do you think geopolitics events can affect a wave 5? Absolutely. I mean, just that's what the Elliott Wave theory does perfectly. It also takes into account for, I mean, it doesn't do it best in real-time analysis, but in hindsight analysis, there's always going to be a reason, right, for anything. And the Elliott Wave theory also takes that into consideration from a market psychology standpoint for geopolitics as well. It's always talked about. It's talked about in their literature. It's talked about in their seminars. It's talked about in their debates and everything. Even in the book, they talk about what big events that happen. The Elliott Wave theory does a fantastic job of taking that into account in hindsight. That is, in real-time analysis, it's a little bit difficult to account for, but in hindsight, there's always going to be a reason. XLM managed a leading diagonal from August 3 to August 14th, whereas XRP... Oh, wait, hold on. We got... ooh. I love your Litecoin analysis. However, I've never seen you dive it into XRP. Mind doing this on the live stream? I want you to know yours. Hey, brother. Well, thank you very much for your donation. I just went over a very detailed count for XRP. Hopefully that was helpful. Maybe I answered all of your questions, but yeah, we just did a deep dive into XRP. Let's see. XLM manager leading diagonal. I don't want to go into XLM. It's basically the same thing as XRP. There's no point in talking about XLM since it's a sister coin. Why in XRP are you looking for 1, 2, 1, 2 instead of 1, 2, 3, 4? I already went over that. Do you find any RSI? Okay, we just talked about that. Can I look at Link as well? Link is basically the same story. No, and no. We already did it. All right, ladies and gentlemen, that's going to be the end of the live stream here. Hopefully that was helpful. Again, if you're interested in, getting more insights to the live stream or these, market insights from me, definitely check out the link in the description below for Discord and also Patreon. Also, if you are interested, just in public analysis, make sure to hit that video, subscribe button, subscribe to the channel if you haven't already. Thank you very much. I will see you guys in the next live stream. Thank you very much. Have a fantastic rest of the week.